Hi everyone, and welcome to today's morning report with me, Richard Perry, market analyst at Hamtech Markets. On Friday the 1st of August, it is Non-farm Payrolls Friday today. And these markets are already volatile, so that's just going to add to the volatility that we've got today. The European markets have carried on from yesterday's sell-off on Wall Street. The DAX and the FTSE are around about 0.6% lower in early trading. And that comes despite a decent outlook from the Chinese manufacturing PMI from both the official and HSBC numbers. The official Chinese data increased to 51.7 from 51.4 expected. So that was a positive move there. Gave the Asian markets a bit of support overnight. But certainly the US sell-off yesterday was driven by a range of factors, really. I mean, including anything from Russia to Argentina, Argentinian default, to the announcement in the afternoon that the employment cost index had increased in the States. Now, this is not normally seen as a key bit of data, but certainly it suggests that there's a possibility of wages growth coming through in the States, which is the key thing that's probably keeping Janet Yellen from increasing interest rates at the moment. So that was leapt upon and induced a bit of a sell-off into the afternoon. And that's continued today, so that's set us up for this non-farm payrolls report that we've got coming out later. Although before that, you've got all these PMI data for Europe and UK, and then into the afternoon you've got the ISM number for the States as well. So lots going on. What we've seen is this VIX index. This VIX index spikes sharply higher, but from 1335, I think 1333 up to 1695. So a huge increase in volatility, over 30% there, and certainly suggests that traders are now taking on more options for insurance ahead of a potential correction in these markets. So that suggests that increased volatility, more options trading, and yes, there's a desire for a bit of insurance for a potential sell-off, certainly from traders. If you're going to look at the dollar index, well, there's not. The dollar continues to strengthen, and you've seen over the past 2 weeks, 3 weeks now, this dollar continue to improve against all the major pairs, but just very slight signs of euro support coming in. I'll talk about that in my euro chart in a bit, but yes, it could be something going on there in the euro maybe that could induce a bit of a rally in the coming days. So I'll talk about that in a bit. But what we've got at the moment is the Spanish PMI that came out earlier. That disappointed, so that has helped to induce that correction in the European stock markets. Although although the euro remains fairly well supported today. You got the European PMIs from France and Germany coming out in a little bit, but also you've got the UK manufacturing PMI coming out at 9:30. That's forecast to just drop slightly to 57.2, although you'd certainly say that remains very strong if that is the case. Into the afternoon at 3 o'clock, that's actually after the payrolls report, you've got the ISM number for the States. That's forecast to improve slightly also to 56 from 55.3 last month. But as I said, you've got these payrolls data, which will be the big focus in the afternoon. Now, the payrolls came out 288 last month, which was way ahead of expectations. 230 is the expectation according to Reuters consensus today. The ADP number on Wednesday was slightly below that, and the ADP has been a very good indicator for non-farm payrolls recently. So that might suggest a little bit of lower than 230, but we'll wait and see how that goes. But throughout this payrolls report, you've got the Other factors, as I said, the hourly earnings, which will be very important, I think, today, which will be focused on 0.2% growth on the month is the expectation there. Anything above that, I think, could induce further downside in these markets. Traders are increasingly concerned, following on from that FOMC meeting. Statement on Wednesday, traders are increasingly concerned that the Fed may now be looking at this wage growth as the key indicator. So that could be a big element of this payrolls report. You've also got the participation rate and also the unemployment data as well. So key factors throughout this payrolls report. Wow. Okay. Into my chart of the day now. The S&P 500. S&P had a big correction yesterday, 2% on the downside. Took it below all this key support. 1945 up to 1955 was the key support band there. Burst through that support. Now it's opened the 1925, 1926 next reaction low, and that was from mid-June. But interestingly, look at this. You've got this big primary uptrend in place on the S&P 500. Zoom out very quickly here. You'll see how many times this primary uptrend has been used. It's a very strong indicator, and providing of support. Now, where are we now? Bang on that primary uptrend. So traders will be certainly looking out for that. If that starts to break down, then that would not necessarily be, certainly near term, that would be negative. But also you've got this 144-day moving average, which again has been a good basis of support throughout. You've not traded underneath that since Q4 2012. So traders will also be looking out for that, but that doesn't come in back until 1885. So quite a way down in terms of the longer term the longer term outlook would remain positive until that starts to break down. So you've still got a fairly reasonable size correction that you could be contained within this. Near term, you'd certainly say the pressure is on. I mean that that sell-off that we've seen in the S&P 500 just suggests also closing at the daily low as well is not a good indicator there. But will be interesting to see if we can find some support today on the S&P. But yes, this payrolls data that comes out before then could have a major impact on this market. Certainly the European markets are fairly weak at the moment, but we'll wait and see how these PMIs pan out, and also the payrolls data, which could have a big impact on the S&P. Anyway, I wish you good luck in your trading today, and I will speak to you later. Thank you.